I believe that we are going to see silver hit heights in years to come that people are not going to believe. They're going to look back upon the price of silver today and go, wow, look what happened.
This week's specials with Miles Franklin Precious Metal Investments. Type 2 American Silver Eagles for only $7.75 over spot, and 2-ounce mother and baby platypus coins from the Perth Mint for only $3.75 over spot per ounce. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We have a returning guest of great renown. Greg Mannarino is also known as the Robin Hood of Wall Street. He's the founder of TradersChoice.net. He's a favorite of our viewers because they know he's got their back, he's in their corner, and he's trying to watch out for all of us against the powers of craziness. Greg, thanks for joining us again here on Liberty and Finance.
I love that. Powers of craziness. Maybe that should be the new name for it all. Absolutely. It's a freak show. Great to be back. Thank you.
You put out a while ago that you changed your splash screen to say banned over the target. And we've talked about that in the past, where the more that we tell the truth about what's actually going on, the more we risk being deplatformed or censored or being labeled as misinformation. So it's almost a reverse logic function for people that if something gets consistently labeled as misinformation, they better pay attention. In fact, that's what we wanted to kick off with. Since there's only 77 questions that have been submitted in the last day ahead of your arrival, of which I'm going to only be able to select a few, if you could start us off by these crazy times that we're in. You were just reflecting with me before we got started, and by the way, folks, today is Monday, October 11th, 2021. Greg, you were reflecting with me about things that conventional wisdom or conventional analysts have been calling tops in various markets, or calling for things, and you're saying, no, people, it's just the opposite of what you'd expect is what's going to happen. For one of the examples of that you've been saying for some time is that the economy's been in free fall forever, and yet the stock markets continue to march forward with, unending new record highs. But can you tell us what you see as the biggest examples of an upside down or crazy time that we're living in, and then we'll zero in on some viewers' questions.
Wow, that's huge. Well, look, I want to put the perspective on this in such a way that maybe it's easier for people to understand. Generally, the market does the opposite of what people believe it's going to do. That's wisdom that I think people need to take away from all this. But the easiest thing to understand is, and I've been saying this virtually every day, nothing is what it seems to be in this environment here. It's a freak show. It's upside down. Black is white, white is black. Markets make no sense. Nothing makes sense. But if we can understand this from the perspective that we have a hyperbubble in debt that is the driving force behind everything we're seeing, that is being fostered by a central bank who is attempting very successfully to finish what they started. I want people to understand this. Central banks were established, the Federal Reserve especially, to one day own it all, to one day control the world via the financial markets by controlling the cash, the way it moves throughout these markets, being able to essentially do anything they want without any restraint. Well, this set the stage for what we have now, which is a managed market, a massive wealth transfer effect, an elimination of entire class of people, and they can expect this to get worse. The distortions that exist today in this market are so extreme, it's even difficult for me to get my head around, and I study it every day, every single day. But what people can expect is more of the same. Moving forward here, a hyperbubble in debt that's going to get much, much larger. Our economy contracting at its fastest pace in history. Bad economic news driving the market higher. That's just the way it's going to go until it doesn't. And I don't know how many of your listeners are paying attention to this, but I created a new indicator. It's mine. I think it's excellent. It's called the MMRI, Mannarino Market Risk Indicator. It's a measure of risk, market risk, based on what's happening in the debt market. It's kind of ingenious, and I should have thought of this many, many years ago, because I always look at the debt market and the dollar. I combine these things into an equation that allows us to measure risk. It's gaining as of right now, but we're still in a low risk, meaning the market is going to go up. Look at crude oil. It's a major driver here. It's like almost $82 a barrel today, going much, much higher, no doubt about it. So that's the environment we're in. We're trading the fakery, the rigging, the propaganda, the mainstream media nonsense, the distractions. That's what we're doing. That's all we're doing. If you were to look at this market from a normal perspective, well, it's obviously in a hyper bubble beyond belief, and people, should be expecting the market to drop. I mean, a lot of people are calling for crashes. Someone with a really big name out here, I don't even want to mention them, is calling for a market crash this month. We've been hearing this over and over again. The market keeps going higher. I don't think these people understand the fundamental drivers here. It's debt. It's hyper debt. It's not going to stop until it does. So instead of fearing these things, we need to get ourselves in the right spots and capitalize on it and not let the freak show take advantage of us, period, the end.
You've been guiding people for a long time on the directions that you see things headed based on internals that you look at, including the debt market. This has been and you mentioned a wealth transfer. People are asking, what does that mean? What's the mechanism for that? Because if in fact all of the middle class earners, all the baby boomers are invested in 401ks and IRAs and that sort of thing, and they see those going up and up and up with these record stock markets, how is that not helping them? How is that going to result in a wealth transfer?
Great question, but it sums it up like this. These people, just like the last time, are going to lose. It's always the institutional investors that get out first. Look, here's the situation. We have suppressed rates that are now going on since, how long now? 11, 12 years, 08. And this is a grand theft on an epic scale. Generally, people who have an interest earning account are being robbed blind in order to fuel the stock market bubble. Yes, people who are invested, and not everyone is, in the market, like in an investment vehicle that only makes money when the stock market goes up. They're looking good. They're feeling real good on paper. They have nothing. These are unrealized gains. They're not realized. They're nothing. It's zero. They're not real until they become real, until they close those accounts and pull that cash out of there and allocate that into some other thing. So they got nothing. They're sitting there looking at digits on a screen. That's all it is. There's nothing more to it than that. So what's going to end up happening here, just like it happens every single other time, is this market is going to crater, and crater on an epic scale. There's just no doubt about it. And what's going to happen is these people are going to get stuck, as they always do, on the long end of this market as the market plummets. That's the massive effect here. That then investment banks, people like myself, are going to short this market, and all that wealth that was built up in those 401k plans and everything else is simply going to be transferred from their digital screens to my digital screens, or these other banks and institutions. Then we're going to take those assets and allocate that into something else. It's a game. That's all we're doing. We're playing a grand video game in many ways. So when people are looking at their investment portfolio, what are they really looking at? They're looking at nothing. They're looking at digits on a screen. I was just talking to a friend of mine this morning who has I would say, a rather substantial amount of cash in his 401k plan. And he's like, Greg, what do I do with this? I'm like, just be ready. And, don't let your brokers tell you, oh, don't worry about it. Some people are just too damn greedy is the truth. People can choose to get out of an investment vehicle. Sure, they're going to take a hit, maybe 10, 20%, but it's nothing compared to what they will suffer when this market rolls over. We are going to get an implosion in the debt market, and it's going to be unbelievable, and that's going to put a lot of pressure on the stock market. Wealth is just going to move from one reality into another reality. Risk on will become risk off. That's it. It's very simple. The markets are not rocket science. They're pretty simple to understand when you realize where cash moves in certain types of situations. That's really what it comes down to.
Another market that people have been watching or participating in is the real estate market. People who are homeowners have been seeing the Zillow values of their homes going up and up and up over the past decade, especially. And a lot of people got hurt last time in the global financial collapse, 2007, 8, 9. We have a question here from a viewer, Patty O'Shaughnessy, who says, Greg, and again, this isn't individualized investment advice, but the principles involved, please. What would be your advice to a young couple looking to buy their first house? Wait until the debt markets begin to fail or get in now? By the way, they say we have a hedge position in precious metals in case of an SHTF environment. So people who are watching the real estate market and wondering when to make their move in, your thoughts of what they should be watching.
I always say this: it is always better to own something than to rent. You're just helping out someone else's future here by renting. I don't like renting. I like owning things. I do feel like housing is in a massive bubble. When that bubble bursts is anyone's guess. I have no idea. I don't even think about it. I own real estate myself, but I don't think about it. What would I suggest to someone like this? I'd say buy something. I know you might buy at the top of a market, but at the same time, there's no way to predict this. And that's what makes me sick, is when you got people literally pointing at a particular date, a particular time. It can't happen. Or even a particular, like Evergrande. It was all over the place for all. No, you can't. I told people at the onset, this Evergrande thing would be a zero. And I think I nailed that one to the wall. You can't do it. No one's smart enough to do it. So anyway, going back to real estate, look, I own real estate. I'm not in any rush to sell anything. I'm going to hold on to it and just ride it out and stay hedged, like this person just said. You can't be all in on any one thing. And if let's say you were to buy a house and all of a sudden the market craters, as long as you can, you don't have an adjustable rate mortgage like last time it melted people here. You could survive it. And if you plan on staying in the house for a long period of time, maybe okay. That's my take on real estate, really. I think, like I said, it's always better to own something than to owe. I hate owing. I don't owe a dime to anyone on this planet. Everything I have, I own. It's mine. I hate that. So I would give that advice to everyone else. Own things. That's what makes the difference. Forget about being a slave to anybody.
The related question, again, you've advocated for years people owning physical assets such as anti-bubbles, such as physical silver that you've talked about. There's a couple here. Ed B says, when silver goes way up, where will you be able to sell it to pay down debt with inflated cash? So first of all, the question is, do you see that as a valid strategy for people, that they're going to hold on to something like metals and then expect at some point in the future when the distortions are reversed that they'll be able to extinguish debt with proceeds that they can get from selling metals?
Well, I would say absolutely. I mean, I think, again, look what's going on here with precious metals. And I still will say this: physical silver is the most undervalued asset on the planet. I think it should be exponentially higher right now. We know what's going on in the metals market. It's no secret. I mean, everybody I know who works on Wall Street, off Wall Street, they all know who's doing it. This is JP Morgan. They're rigging the metals market via the derivative. They've been doing this for years. They're not going to stop. And even if they get caught yet again rigging the market, you think that's going to make any difference to them? No. They get a hand slap and they'll move forward. So absolutely, you got to keep yourself hedged in these manners. I tell everyone, you got to be in the market right now. More specifically, large cap dividend paying stocks. Let these companies pay you to own the stock. You got to also stay hedged. You got to be in risk on and risk off assets at the same time. And this is how you never have to worry. Well, is the market going to roll over today? What's going to happen here? Because risk on, like we're in now, is going to turn risk off. It just is. It's just a normal cycle of the markets. Although nothing is normal right now, these distortions are off the Richter scale. And that just presents more opportunity for us. I don't care what they want to do to precious metals. They can rig it upside down, backwards, and sideways. I love it. I love every bit of it. Doesn't mean I'm going to sell these things anytime soon. I think we're in this for the long haul. The bubble's going to burst. I don't know when. Don't even think about when. I just plan on for the future. And that's what I think people need to do. In a risk-on environment, things like gold and silver, especially when they're being rigged, are on sale big time. I know people write to me every day. Oh, Greg, I'm so disappointed about gold and silver. All the time, every single. But what are they looking to do? You want to trade this stuff? Okay, I guess get into the derivative market. But if you're going to sit here and you're understanding why you're doing it, what are you doing? You're betting against the debt, becoming your own central bank. realizing that at one point this twisted hyper bubble in debt, which has caused a hyper bubble in the stock market, is going to roll over, and cash is going to move from one set of assets into another set of assets, and that's how it always works. So that's how I see it moving forward.
And I'll just follow on to that individual. Anyone who at any point wants to sell metals, they can always sell them through any dealer, local coin shops or major dealers, including Miles Franklin. I'd be happy to help.
Oh yeah, or people. I mean, look, if someone wants to buy something from me, if they say, "Hey, Greg, you want to sell? I have some vintage instruments." Let's just say, for example, someone wants to buy one of my vintage instruments from me, a guitar. Oh, Greg, I'm willing to pay you in silver or gold. Bring it on. I will absolutely accept that, and of course you can sell this. There's going to be, of course, when this rolls over, there are going to be people begging to buy this stuff at one time here when risk on turns risk off. There's no doubt about it. So I don't, people shouldn't worry. What are you going to do? You got to do something. You got to think about the most viable plan moving forward. All right. And that means, honestly, betting against this debt, becoming your own central bank, holding these things. There's no better place to be, in my view. Longer run than in precious metals, more specifically in silver. It still remains my favorite long-term asset of all time.
This next question, again, sounds pretty specific, but maybe you're going to guide us into some general principles that you use on a day-to-day or week-to-week basis to help guide you in this. Christoph S. asks, I'd love to know how much of Greg's portfolio he likes to keep in cash.
Very little. Very little. I don't like to be in cash ever. Cash sitting around it's dead money. You got to put this stuff to work. You need some of it. As a percentage, I really don't even know. I would just say as little as possible. Try to keep around what you need. The rest of it should be going to work somewhere. I hate cash that's doing nothing. In fact, nothing makes me more angry than having cash sitting around that's doing nothing. It has to be working all the time, in my view. You can't have it just sitting around. It's the number one way to lose purchasing power. The dollar is pretty much an evaporating asset at this particular time. So having a dollar that you're watching vanish before your eyes with regard to purchasing power is a pretty silly thing, in my view.
We have a question here about the advice that you've given people over time to watch the debt market. You talked to that briefly here, but why is it that people shouldn't be distracted just by the records being set day after day on the headline stock market indices? Why is that more of a distraction than what they should really keep their eyes on?
Well, the debt market is the driver. Like we started off with, the debt market hyperbubble, which is going to get much, much larger before it implodes, is going to get much, much larger. By rates being suppressed, it deliberately creates an environment of risk, meaning people are putting their cash to work in the stock market, and that inflates a bubble. I mean, the Fed is well aware of this. This is why they started doing this with the QE1, QE2 operation twist. They've never stopped. They're still buying assets in historic amounts right now, and it's being reflected in the debt market. And that's going to flip around. We're going to see rates spike very rapidly at one point, very, very rapidly. And that's going to be a clue here. But I sum this up real simply to a specific number, that MMRI I was talking about, right on my website, traderschoice.net. Just keep your eye on that. I even break it down into phases. 50 to 100 is low risk. We're at about 94 right now. Next phase, 100 to 200 is moderate risk. Above 200, high risk. Above 300, extreme risk. So this is an easy way to gauge the market by looking at a specific number. But again, we have to take in everything else going on. We got to look at crude oil, which is a massive driver of these markets. We got to look at the current situation globally. What are central banks doing, more specifically the Federal Reserve? What's the relative value of the dollar? I mean, there's a lot to this, but you can sum it up in one number. And that's what I did with that MMRI. I think it's a brilliant thing.
Well, you've been trying to make things simple and straightforward and accessible for ordinary people for some time, and I guess that's why they call you the Robin Hood of Wall Street. So here's a question from Neil Hahn. It has to do with something you just mentioned, which is about owning things. And again, I don't think you'll give us a specific number, but I think you'll give us guiding principles. How much metals does Greg think we should have? So in terms of your overall investable net worth as you move forward versus how much you hold for your trading activities, that sort of thing?
It's really tough, and I think this depends on the individual person, their risk tolerance, and what they actually believe is going to happen moving forward. Look, there are people, and you know this as well as I do, that are saying, "Oh, don't be pushing gold and silver. They're going much, much lower," and they may go lower in the short run. Okay, I don't think about the price action. I'm thinking long-term, debt bubble bursting kind of thing like that. So I would say, with regard to putting money to work or putting cash to work in real money, which would be physical gold and silver, I mean, it should be a substantial part of your portfolio. And for the average guy or the average girl, at least 25% would probably be a good number. I know people that are 100% invested in this stuff, and that's just the way they feel. It is, I would never touch the stock market. Greg, you're crazy for touching the stock market. And maybe I am, but it works for me because I know how to work it. But for some other people, maybe it's the bulk, vast majority of their investment portfolio. But averagely, it's so hard to say, 25, 30%. It should be a pretty high percent because we do understand that these things are just so undervalued. At least I hope people understand that, based upon just, if you want to look at one metric, okay, and I tell people to look at this. Look at the Dow gold ratio and the gold silver ratio. You look at just that, going back on historical norms, you will see why Greg Mannarino says silver is the most undervalued asset in the history of the world. This is really an individual thing, and it actually transcends, mathematics. There are a lot of people that, how can I say this? They have their faith in it. And I mean that in the literal sense. Like, a lot of people write to me, "Oh, Greg, gold and silver are God's money." I personally don't believe that. I think God's currency is faith, hope, charity, and love. But that's just besides one. But there are people that will literally write to me, "Greg, I'm invested in God's money, all of it, because it's God's money." All right, that's their perspective. They're entitled to it. But it's, like I said, it's an individual thing. I think people need to be more diversified. I want to be in multiple assets. I want to be, believe it or not, in real estate. We covered that already. I want to be in this market. We covered that already. I want to be in metals. I want to be in other things, artwork, musical instruments. I'm also collect both of those things. I collect artwork. I collect musical instruments as an investment. I also have classic cars as investments. Cryptocurrencies, I have a lot of that too. So Greg Mannarino is in lots of things. So, that's how I can also sleep at night too. I am extremely hedged. I really am prepared, I think, for this market to turn on a dime. It really doesn't matter. And I've been saying to people for the longest time, stay hedged. Stay hedged. Get yourself into a lot of different things so you don't have to worry about, if this happens, then this. If this happens, then that. No, you don't have to worry about it.
You've spoken for some time on your channel about the reality of the economy versus what's going on in the headline indices. You've talked to us about inflation, the reality of that versus what's being officially reported in some of the headlines, financial statistics by the government, et cetera. One of the things you have talked about is the cratering of our manufacturing sector, of the transportation being, the supply chains being fragmented as an evidence of contributing to that. A lot of this stuff was accentuated over the past year and a half because of lockdown policies that we're all well aware of. Peter Dreyer asked Greg about the hundreds of cargo containers off our coasts. First, the government shut down businesses. Now they're shutting off the supply of goods. What will they do next? Can you talk to us about what are some of the knock-on effects of these major shutdowns and disruptions?
Well, absolutely, 100%. Yeah, and he's right about this. This is the game that they play, people, and I'm telling you again, nothing is what it seems. Nothing is what it seems to be. What they're feeding people via the mainstream media is nothing but propaganda. These are script readers. They are worthless individuals who are sitting there trying to propagandize everyone. Oh, look here. Don't look over here. You're not allowed to know about certain things here. I tell people all the time, be ready for anything in this environment. And look what they did to us. I mean, they literally shut down the global economy, blamed it on something else that we all knew was coming. We have heard they would use a mechanism like this. I'm not even going to mention it because I already got warned. I don't know if you did from YouTube that I can't mention. Did you know that happened to me? Let me just cover that real quick while I'm on here. I got a warning that they were going to pull my channel. This was 2 weeks ago, and I barely talk about this. This whole scamdemic thing. That's what I kind of refer to it. Some people apparently reported me for putting out false information about this thing that's going around. Oh, Greg's spreading false information. So I got warned. I got a warning. It was a single warning. In other words, you're not even allowed a second shot. So I don't even talk about it anymore at all. I try not to cover it because I don't want my channel to get pulled. I'll be honest with you. I'll go to another platform. But this is the level of how things have gotten right now. You can't even, there's no free thought, there's no free action, there's no free movement. You're not allowed to go against the grain, have your own opinion. It's just not permitted anymore. You will comply, and that's it. It's pretty sick if you ask me. But absolutely, supply chain disruptions, whatever they got to do. How about this one? We see crude oil right now just about $82 a barrel. When was the last time anyone out here has heard of a bombing on a refinery, a pipeline disruption, anything like that? You don't hear about it. You only hear about terrorist attacks on refineries or disruptions with regard to whatever it might be, something that's a missile attack when crude is falling. Okay, it's all a mechanism to keep it propped up. Well, it's propped up right now, so guess what? It vanishes mysteriously. It's a miracle, isn't it? Oh, there hasn't been a terrorist attack in a long time. That's what they do. It's all a game. So if they're gonna keep the supply chains disrupted by having ships floating out in the harbor with nowhere to go, well, they're gonna keep doing that. They're gonna do everything that they possibly can to keep things the way that they are. This is a new paradigm, a new set of rules here, and we don't get a part in it. We have no representation here in the United States anymore. It's pretty much every man and woman for him or herself. That's the situation we are in. We got to take care of each other. My philosophy: love each other, care about each other, be charitable, and that's it. We got to understand that this is different. This is a whole new thing right now, and I warned this would happen from a long time ago, years and years ago. A new feudal system, a two-tier society, all the things I've said. Markets going one way and the economy going. I've done this same movement with my hands to try to demonstrate this to people for years. Market, economy, years I've done this. Well, boom, I think I nailed that one too. And this is going to get worse.
Back to metals, we have a question from Matthew Belanger Camden, who says, what is your view on platinum and palladium? There are about a dozen questions among these 77 questions having to do with platinum specifically or palladium, talking about, catalytic converters, whether it's used as a catalyst in gas and oil refining, whether it's going to be used in the future green economy. Your thoughts on platinum and palladium?
I love them. It's astonishing the price action of these things over the last several years. Seriously. I own them. I own all of them. I always tell people this. I own gold, silver, platinum, palladium. Of the four metals, silver is my largest holding, then gold. Platinum and palladium, I would say, are about equal. I love all of them. I think this is where people need to be too. Like I said, you've got to be diversified. You got to be into a lot of things. But if you had to choose one, I'm still going to say it's silver. Put a few dollars away every month and just throw it into silver and just keep stacking this stuff. I believe this, and I'm not right all the time, but I'm right a vast majority of the time. I believe that we are going to see silver hit heights in years to come that people are not going to believe. They're going to look back upon the price of silver today and go, wow, look what happened. That's really what I feel is going to happen down the line. When is it? When's this going to happen? When the debt market implodes. When's that going to happen? Have no idea. Don't think about it. But that's the key. The key is the debt market to everything that's going on right now. Suppressed rates, think of it this way. Rates have been suppressed so long, it's almost like a coil that is being pulled and pulled and pulled and pulled. And all of a sudden, boom, it's going to break. And it's going to break at a time of their choosing. All right, this is not going to be by accident either. Nothing here is happening by accident. So when this happens, we just got to be ready for it. This is what we can expect. Expect the unexpected. So get yourself in the right spots now so you don't have to worry about it. Anyone that's trying to pick a top or a bottom in any asset is deluded. It's an impossibility. It cannot be done. Maybe you'll get close, maybe you'll get lucky once in a while, but it just can't. That's a loser's game. People that are trying to pick tops or bottoms, it's a loser's game, period, the end.
Pete Ausby asks, when the Fed, quote unquote, buys an asset, does that mean debt?
Well, absolutely. Look what the Fed is doing. It's nearly insane what the Federal Reserve is doing. They're running what I've been calling an inflation creation machine. Okay, and this is how they're issuing debt and then they're buying it back. They're issuing debt and then they're buying it back. Issuing debt meaning they're creating cash out of thin air. Cash, these are not units of wealth. These are units of debt. We don't even own them. Every single dollar in our pockets, in our bank accounts, digits on a screen, we don't own these things. These are owned by the issuing central bank, plus interest that they create out of nothing. So they're issuing debt in that manner, and they're buying it back through another door. They have minimum targets every month. No top. I think we all know this. It's pretty common knowledge. $100 billion in treasuries, $40 billion in mortgage-backed securities. That's minimums. There's no end. There's no top. They can do whatever they want to. And this is what we're being allowed to know. And I think it's also becoming common knowledge that the Federal Reserve is funneling dollars around the world. The Federal Reserve is funneling dollars to central banks around the world who are using dollars to buy assets. I think this is probably the biggest secret in the history of the world because no one's talking about it. I've been mentioning it for years. But this is what they are doing, effectively dollarizing the world. And we're just seeing the opening salvos of what's happening now. They've opened up the floodgates here of inflation, something I think we all knew was going to happen. And now they can't stop it. And not that they even want to stop it. This is something they've been working on for a very, very long time to create. So now we have all these extra dollars chasing the same amount of goods. So yes, going back to the question you asked. So this is what the Fed is doing. They're issuing debt and they're buying assets with them. They're buying these assets with their product. It's not ours. We don't own this stuff. They're creating slaves on a massive scale, not just nation slaves, but individuals too. People today, margin debt in the stock market, consumer debt, hyperballooning, personal debt, it's out of control. In fact, that was the title of the video I did this morning, It's Out of Control. And this mechanism, it's not by accident. This is all by design, people. So just get hip to it. And if we know that, we need to take the opposite side of the trade. We need to be in hard assets. I don't know another way to put this. The best way to play this is to own things that you own yourself. There's it's not owed back to a central bank. This is why, again, I'm a cryptocurrency bull. I've been a cryptocurrency bull for an extremely long period of time, since like Bitcoin 3,000. It was under 3,000 when I told people to stop buying it. What are we at, 57,000 today? Watch what Bitcoin's going to do. It's going much higher. Much, much higher in this environment too.
Second question from Pete Ausby. What is risk on and risk off? You use those terms quite a bit, and people want to know just from a simple explanation that they can understand. When they say that the environment is moving from risk on to risk off at some point in the future, what exactly does that mean?
Sure. Risk on means the environment is created in such a way by suppressed rates that cash makes its way into risk assets. Risk assets being equities, stocks, the stock market. Risk off are things like gold, silver. And I'm going to say this too, cryptocurrencies I think are risk off too. So I think we're going to see, like I said, an implosion in the debt market that's going to rock the stock market in the same way suppressed rates have allowed a hyper bubble in the stock market to develop. It's going to have the reverse effect when rates climb. And this is what the MMRI tells us with regard to risk. Is telling us risk is rising in the market as of right now. This only came out a few weeks ago. I published this. And it's free for anyone who wants it. I don't charge a freaking penny for it. I just want people to know what's going on so they can gauge their own risk for themselves and maybe and it's not just a standalone tool. It just gives us an idea. It's yet another tool that people can use to maybe figure out, hey, you know what? Maybe I should lessen my risk to risk on assets like the stock market and maybe put more into risk off assets like gold and silver and platinum and palladium and, in my opinion, cryptocurrencies as well. I also think crude oil is going to soar. We haven't seen anything yet. We're at $82 today. We're going much, much higher. Goldman Sachs has a $90 target. I think they're low. Most other investment banks have $100. Some are over $100. I I would not be surprised to see 125 within a relatively short period of time. And that's going to boost the energy sector. That's going to boost the banks who are leveraged beyond their eyeballs in crude oil, the investment banks. And it's going to pull the market up until it doesn't. This gap is going to get bigger. Market, economy. And that's by design too. That's part of the wealth transfer effect. And then again, it's going to implode. And all those lovely people who are looking at those 401ks and they're smiling like this, then the same thing's going to happen to them like it happened every other time before. They're going to get destroyed. And they're going to sell at the worst possible time. That's what always happens. The average guy and the average girl cannot compete with a professional. Can't do it. It's just not. The professional people, even people like myself, for example, I consider myself a professional. I talk to everybody. I mean, you get connections that the average guy or the average girl doesn't have. And that's a very, very large disadvantage to people. That's why when I do my video blogs and I tell people, hey, this is what's going on, that's what's going on, maybe you want to look over here. Because I talk to everybody. I talk to all these guys. And I know most people who work at these investment banks. So I get a little bit of an inside picture, maybe a little more than a little bit of an inside picture as to what they're doing. And if I know what they're doing, what do I want to do? I want to kind of mimic it. And I want people to get on the same page. I don't want people to get taken advantage of, just like you. You do not want people to get taken advantage of. You want people to understand the situation. That's what we do. And I think really, I might have said this the last time we were on, that we are getting through to people. I think they're understanding what's happening.
Greg, for people who want to follow your work, where should they get plugged in?
Oh, just go to my website, traderschoice.net. Everything is there for you. Lots of free stuff, downloads, a chat room, lots of smart people there. And I want people to take advantage of everything that they can in this environment, because we need each other more than ever.
Just as Greg mentioned, taking a risk and talking about controversial topics, putting our platforms at risk. Guys, if you don't want to miss out on any of our interviews with Greg or any of our guests, no matter what happens to our headline channel, make sure you get on our email list, because that we can guarantee we're going to send to you by going to libertyandfinance.com, putting in your name, email address, click submit, confirm. When you get a confirming email, you're in. And we just thank you, Gregory, as always, on behalf of all of our viewers and myself. Just thank you for joining us on Liberty and Finance.
Thanks for having me here. Appreciate it.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price, with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.